Good morning to our colleagues and participants from the Kingdom of Eswatini, as well as to our colleagues from Ghana. And good afternoon to our colleagues in KL and Armenia. And yes, I also forgot to say good morning to our colleagues in Europe. Welcome to the Inclusive Green Finance Capacity Building for the Kingdom of Eswatini. This event was organized by the Alliance for Financial Inclusion and the Kingdom of Eswatini and hosted by the Ministry of Finance, Center for Financial Inclusion, the Central Bank of Eswatini, and the Financial Services Regulatory Authority. But before we proceed further, I would like to acknowledge the Honorable Finance Minister Neil Rickenberg, the Honorable Governor Majosi Sitol of the Central Bank of Eswatini, who will be joining us, and Alliance for Financial Inclusion's Executive Director, Dr. Alfred Hanig. Thank you all for joining us today. Next slide, please. So just a few reminders, as most of us are probably aware of the Zoom functions. Please always keep your mic off unless you want to speak to avoid noise interruptions. Putting the video off unless you're speaking helps in, especially when internet connection is weak. If you want to say something, participate in a discussion or ask a question, please use the raise function and you will be called later. After speaking, click again the raise hand function to lower your hands down. Alternatively, the chat box can also be used if you want to communicate something. Next slide, please. Now let's have a quick try of the last two functions to warm up for the session. Those who are attending AFI capacity building event for the first time, please click the raise hand function. Okay, I can see hands being raised. Thank you very much. Please click it again to lower the hand down. Thank you. Now, another round. Please click again the raise hand function if this is your first time to attend a virtual training event.
Where is the raise hand function here?
Okay. Thank you very much. Then please click on again the raise hand function to lower down your hand. Now let's try the chat box. What comes into mind when you hear the word climate change? Please write one word in the chat box. What comes into mind when you hear the word climate change? So please just write one word. Okay, I can see words coming. It's pollution, sustainability, disaster, risk, poverty, drought. Okay, thank you very much. So we're now very much ready to proceed with our session for today. To formally open the program, we have with us Dr. Alfred Hanig, Alliance for Financial Inclusion's Executive Director, to deliver his opening remarks. Over to you, Dr. Hanig.
Yes, thank you very much, Jen. And good morning to everyone. I would like to acknowledge the presence of the Honorable Governor of the Central Bank of Eswatini, Mr. Majosi Sitol. Of course, everyone present, representing the country's financial sector regulators, the Ministry of Tourism and Environmental Affairs, the Energy Regulatory Agency, and representatives from financial institutions as well, welcomed. We're also looking forward, as you said earlier, to the remarks of the Honorable Finance Minister, Neil Reichenburg, later on this morning. Let me also welcome the representatives from the Bank of Ghana and the Central Bank of Armenia who are joining us today. Welcome you all to this capacity building on inclusive green finance. Now, perhaps I would like to start off on a more general remark, and this is regarding Eswatini's leadership on financial inclusion. We are aware that Eswatini already successfully achieved the NFIS headline targets, which is the National Financial Inclusion Strategy objectives, well ahead of its 2022 deadline. We have been informed that in the case of the target of percentage of adults with access to 2 or more formal products, the target of 75% was already exceeded by 10 percentage points to 85%. I think these outstanding domestic achievements, as well as the contributions from Eswatini to the global network, are very much appreciated, and I hope that we can soon share some of your advances on inclusive green finance with the rest of the members as well. So given your leadership on financial inclusion, we really welcome this opportunity to collaborate on developing inclusive green financing in Eswatini. A few words on climate change and its impact in Eswatini. We are all very, very aware that climate change poses a real threat to financial stability, and the impacts of climate change are already being felt today. The Kingdom of Eswatini has already experienced the effects of climate change, in fact having a negative impact on several sectors of the economy, and is also further amplifying socioeconomic issues like equality, food prices, poverty, and so forth. Now, extreme weather events such as drought and floods, as well as temperature changes, have been affecting agricultural productivity, and rising temperatures are affecting water resources as well as the rise of vector and disease transmission. Now, amid all these vulnerabilities, groups with the most limited coping capacities, i.e. the disproportionately affected and excluded groups, they suffer from the most severe. Against this background, and this leads me into the green finance discussion, green finance has gained importance when discussing climate action. Since the signing of the Paris Agreement, there have been positive developments in climate finance and green finance globally. And as countries communicate their nationally determined contributions, the financial sector also needs to keep up with mitigating climate-related risks for the financial system and channeling the financial resources needed to support climate ambitions. After initial focus on climate mitigation, many countries are now gearing towards adaptation priorities, as it is indeed necessary to build economic resilience while lowering the carbon footprints. In the financial sector, support for these actions is also apparent. We see the rise of green bonds, green lending, climate risk insurance, and other financial mechanisms and instruments that are geared to mobilize resources for resilience building and low carbon developments. Furthermore, the recognition that climate change presents a material risk to financial stability creates a need for financial regulators to reflect on climate-related risks to the financial sector. And some regulators are already advancing towards integrating climate change into their risk frameworks. Now, this brings me to inclusive green finance. While climate change deepens poverty, the research, ample research that we have in front of us, shows us that financial inclusion can build the resilience of individuals, whether to a sudden and extreme climate event or the gradual effects of varying rainfall patterns, sea level rise, or saltwater intrusion. Savings, credit, insurance, money transfers, and new digital delivery channels can all provide vital support for those managing new environmental realities. And access to financial services can also empower individuals. and MSMEs to climate mitigation and reduce their environmental footprint. Financial inclusion, as we see it in the AFI network, is therefore one of the tools that can help in resilience building among the most vulnerable groups, while at the same time allowing them to invest in low carbon economic activities. Furthermore, it also helps workers in the transition away from carbon intensive industries. Across the AFI network, this is a rapidly developing policy area, and we see a growing number of members adapting IGF policies and initiatives, either integrating them in their financial inclusion initiatives, in the national financial sector strategies, or as distinct policies. Now, when we are developing IGF policies and regulatory intervention, it is very important to start by building the capacity of those involved, understanding the specific vulnerability of the country, and of course, designing policy interventions that focus on those most vulnerable to climate change. Here, I want to highlight once again the importance of gender inclusive finance, and that it is crucial to integrate the specific vulnerabilities of women to climate change into policy design from the onset. When we speak about in-country implementation, we can actually say that AFI has seen quite high demand from its members in the past year to follow on some of these activities on the ground. The capacity building today is one of AFI's initiatives to support its members on the ground in advancing their financial inclusion agenda. We are witnessing more and more of our members, financial regulators and policymakers developing and implementing IGF policies and regulatory interventions through meaningful dialogues on the national level. As peer learning, as you are all aware, is one of the pillars of the AFI network and has proven a highly effective way to transfer and exchange knowledge on cutting-edge policy solutions, AFI members also today at this very event continue to learn from one another. And we have our colleagues from the Bank of Ghana with us, and we also are very proud to have our colleagues from the Central Bank of Armenia with us, who will help us to conduct this training. And they will be sharing their own experiences in IGF policy development. Now, before I close, let me just say that we do see inclusive green finance, IGF, as an emerging policy area in the network. And we truly hope that this capacity building helps the Kingdom of Eswatini in charting out the next steps on how to support resilience building and low carbon development objectives through financial inclusion. We look forward to seeing these developments in the country, and I want to reiterate that AFI and the management unit will always be supportive of any IGF initiative or policy development for the financial sector that the Kingdom of Eswatini may need in the future. Thank you so much for this very excellent collaboration. Thank you once again for your participation, and of course we wish you a fruitful discussion and exchange of ideas. Good morning to Eswatini. Thank you.
Thank you, Dr. Hanig, for the very insightful message and for sharing the developments in climate change and inclusive green finance, including of those in the AFI network. Financial inclusion is indeed very relevant, not just to financial stability, considering the risks involved, but to environmental change mitigation and resilience building, including in addressing the vulnerabilities of women. And before we proceed further, we'd also like to acknowledge the head of the financial intelligence, Mr. Fitzgerald Graham. Welcome to this event. So I'm Jen, I'll be your moderator for today's training, and to get to know more who are in the room, the participants who are in the room, let's do a quick poll. Emilia, please launch the poll. Okay, please click on the in the poll, Please identify which institution do you represent. Okay, the numbers are coming. So we see colleagues from the Ministry of Finance, the Central Bank of Eswatini, the Financial Services Regulatory Authority. Okay, more numbers are coming. Okay. Okay, has everyone voted? Okay, thank you very much. So we acknowledge the presence of our participants from the Central Bank of Eswatini, the Ministry of Finance, the Financial Services Regulation Authority, Eswatini Financial Intelligence Unit, Finmark Trust, Ministry of Tourism and Environmental Affairs, Eswatini Environmental Authority, Energy Regulatory Authority, financial institutions in the private sector, and other government agency. Welcome all to this training. So as mentioned earlier, next slide, please. So as mentioned earlier, this virtual training aims to help build the capacity of financial regulators and policymakers, as well as the private sector on inclusive green finance. As such, specific objectives, including understanding the impacts of climate change and environmental degradation on financial stability and the role of financial regulators and policymakers. We also hope participants learn from AFI's 4P framework of inclusive green finance and the policy examples from the network, as well as the impacts of climate change and environmental challenges in Eswatini, and be able to identify key factors for consideration in IGF and green finance policymaking. Finally, we hope that this will result into a general action plan that will chart out next steps for Eswatini to advance inclusive green finance agenda. To be able to attain these specific objectives, this will be a running agenda for the training. We'll have a presentation on the inclusive green finance from AFI with a quick quiz to cap the presentation. And we'll have with us the finance minister to deliver his welcome remarks. And this will be followed by a presentation on climate change and the environmental challenges in Eswatini from the Ministry of Tourism and Environmental Affairs. This will be followed by sharing of experience from our colleague from the Bank of Ghana and from the Central Bank of Armenia. After learning from all these three sessions, the group will go into a breakout session for action planning, and the program will be closed by the Central Bank Governor. So next slide, please. This is the training website. You can download the materials from here. This will be available only for a period of time. We can share later on the link as well. Next slide, please. And now we move on to the next session, which is presentation on inclusive green finance. This session will provide an overview of the impacts of climate change and environmental degradation on financial stability, inclusive green finance as a policy area, including the scope of regulatory approach of IGF, practical examples of IGF policy initiatives among AFI member countries relative to their climate vulnerabilities. Insights on the role of regulators and policymakers in resilience building and low carbon development will also be shared. If you have questions, please post them on the chat or note them down and click a hand raise, and this will be addressed after the presentation. So next slide, please. So for this session, we have with us Ms. Johanna Niemann, Head of Inclusive Green Finance at AFI, to present and discuss inclusive green finance. Over to you, Johanna.
Yes, thank you so much, Jen, and dear participants in this training. I'm really delighted to have all of you in this virtual room today and to have this opportunity to discuss inclusive green finance with all of you. So my name is Johanna Nyman and I'm the head of Inclusive Green Finance at AFI. This will be a 40-minute session, so feel free to at any time share your questions in the chat box, to raise your hand, to come with questions. I'll start off by saying that inclusive green finance is a whole new policy area to the world. It's a niche of green finance, and I think I dare say it's new to all of us, so it's absolutely okay to have questions and to seek clarification, and we will do our best to answer that, me and my colleagues from the Alliance for Financial Inclusion. And just to start, I realized when we're going through the introductions, the Alliance for Financial Inclusion might not be familiar to all of you attending this training. It is a network of 100 financial regulators and policymakers from 88 countries across the globe, with the vision to advance financial inclusion globally. And the idea is to provide peer learning, capacity building, and in-country implementation support around financial inclusion. And we're delighted that both the Central Bank of Eswatini and CFI and the Ministry of Finance of Eswatini are members in the Alliance for Financial Inclusion. So that's why we're here, and that's also why we're bringing in the Bank of Ghana and the Central Bank of Armenia to the sessions today. And of course, as I said, if you have any questions, feel free to ask at any time or to drop us an email afterwards. So today we will be covering quite a number of topics during the next 40 minutes. First, I will speak briefly about climate change impacts, related that to climate-related risks for the financial systems. Then we will go into the specific definition of what inclusive green finance is. I will then bring you through the 4P framework on inclusive green finance, promotion, provision, protection, and prevention. And then we're going to have some practical learnings on how to move forward from here, but also I'll take you on a couple of examples from theory to practice. So allow me, there will be a couple of repetitions during this presentation, but that is also to make sure that we're all on the same page when we then move forward with the rest of the agenda today. So the very first point, excuse me, I'm having some technical issues. Okay. So sorry, I need to just bear with me one moment and I will reopen the presentation so I can share the correct information with you. So first of all, next slide, please, Jen. In terms of climate change impacts, I think we all heard about it by now. It's quite severe. It's not only about a warming globe. It's not only about increased temperatures, but also about more extreme weather events, natural disasters such as floods, heavy rains. It's about hurricanes and cyclones. There is an increase in sea levels, but also an increase in more irregular rainfall, desertification, melting glaciers, and melting permafrost. And of course, this is not isolated events, but this will be impacting the lives of individuals heavily and also the stability of our financial systems. There's some estimates saying that without urgent action, climate impacts could push an additional 100 million people into poverty by 2030. That was numbers coming out before the current global pandemic, so we can only guess how those numbers would look afterwards. There's quite devastating research on the potential impacts from rising sea levels, but also from natural disasters, as you can see here. And of course, if we take this one step further, that will be impacting livelihoods, it will be destroying property, and in some cases, maybe even forcing people to move across borders. and that in itself can give rise to conflicts, to instability, to food shortages, etc. So I'm not showing you this to paint a very bleak picture, but I think it's important we're all aware of the potential impacts of climate change moving forward. Next slide, please. So this is just a projection showing how climate change is projected to impact GDP by the year 2100. And as you can see, there is quite large impacts for many parts of the globe, including Eswatini. And when it comes to Eswatini, I believe you've been already experiencing some impacts of climate change. That includes increased natural hazards, but also some increased droughts and some cyclones in the recent years. Of course, I am not an expert in the environmental impacts in Eswatini, and that's why I'm delighted also that we will have a speaker from the Ministry for Tourism and Environmental Affairs speaking in the next session to share you the specifics. But these are the general climate impacts. Next slide, please, Jen. So climate change related risks. And this is when we start analyzing not only the impacts on the ground and the impacts on livelihoods, but looking what type of risks the climate change is posing to our financial system and to financial stability. Usually you divide climate-related risks into physical risks and transition risks. Physical risks are, I dare say, much easier to understand. It's about there is a cyclone, there is destruction related to the cyclone, and this is posing a risk to the stability of the financial system. This can happen to extreme weather events such as cyclones, natural hazards, but also slow onset climate change like gradual desertification, less rainfall, rising sea levels, or melting glaciers and permafrost, for example. The transition risks are coming with the policy actions taken to curb climate change. These risks occur when moving towards a less polluting or a greener economy, and it's coming from political decisions or from demand. And these transitions could mean that some sectors of the economy face big shifts in asset values or higher costs of doing business. This could also lead to stranded assets. And the basics of this is if there are very strong decisions on government or global level to decarbonize our economy, to shift from producing electricity, for example, through coal-powered power plants to, for example, wind power. That, of course, means that a lot of investments already made into the generating power through coal power plants will be lost, reevaluated, and these could even be seen as stranded assets. That, of course, doesn't mean that we cannot take decisions to move forward in combating climate change, because without taking any decisions, the physical risks, on the other hand, will increase. But it's also important to take into mind that this happens in an orderly fashion. And that's also why I'm really delighted that we have different actors in this training today, because the first step is, of course, to have a dialogue between the relevant actors on the national level, also so the financial sector can adjust to the political decisions happening in other parts of government. This is just a brief slide pondering the links between financial stability and climate change. I've already outlined these specific links, and I have next slide is sharing it even more explicitly. Something that's also emerging right now is research that, one slide back, please, Jen. Thank you. Research showing that there might not only be links between climate change and financial stability, but climate change might also lead to price shocks when it comes to the price of grain, for example, or other food supplies. And this in itself could also be a risk for price stability. So that is even drawing the connection one step further and drawing the issue even more to the core of the mandate of the central bank and financial regulators. I'm of course aware that there are not only regulators in the room today, but I think it's important before any decisions and action are taken to outline how inclusive green finance also relates to the mandate of the institutions before action is taken. That's why we make the case that building resilience to climate change is at the core to advance sustainable economic growth and development. Another point which is also linked in the mandates of a number of financial regulators. And advancing climate change mitigation, so not only the adaptation side, but also the mitigation side, it is key to limit the negative impacts of climate change in the future and thus reduce the physical risks to the financial system. It's also a question of long-term planning and stability in putting in place appropriate green finance and climate change measures that will increase the chances for stability also in the future. Now, Jen, next slide, please. So this is just one, starting to draw the links closer to inclusive green finance. This is how we look at it. In the core of it, you see the vulnerable groups linked to social inequality and tensions. And of course, also climate change heavily impacting those at the base of the economic pyramid the most. So in any society, those that have the least will be the most impacted by climate change because they are vulnerable from before. And then both climate change in itself, as we just saw in terms of physical risks, but also social inequality and tensions, these do impact financial stability. And on the other hand, if we can advance a just transition towards a low carbon society where there's a lot of resilience against the climate impacts that we're already feeling today and will be feeling or experiencing in the coming years, no matter of actions, that will of course also positively impact the vulnerable groups and feedback to advance financial stability. And this is of course not limited only to a national issue, but it is a regional and global issue as well. So this is just to demonstrate the different links that it all goes together. And that brings me to inclusive green finance that we're here to discuss today. I will talk through inclusive green finance, and before we come to the policy framework of the 4 Ps, I'll open up for any discussion or any questions of what we covered so far in this presentation. So inclusive green finance is what we work with in the Alliance for Financial Inclusion. It says it all in terms of we work with financial inclusion, and back in 2017, the leaders in the AFI network realized there is a link between climate change and the most vulnerable in society, because it's clear that climate change will impact the most vulnerable more than the rest of society. But on the other hand, access to financial services will actually build the resilience of these groups in society and provide them with tools to cope with climate change better. So we currently define inclusive green finance as policies and regulation that aim at enabling mitigation and building resilience to the negative impacts of climate change through financial inclusion. Okay, let's take a deep breath. This is quite a mouthful, I'm aware. So allow me to share a couple of examples with you, and then I'll open up for any questions or any reflections thus far. So if we look at the basics of it, access, so financial inclusion as in access to savings, credit, insurance, payment systems. Having access to savings, especially formal ones, they buffer against cost increases. It's diversifying risks. It can provide for an avenue to access credit, and it can also accelerate recovery and reconstruction. This is especially related to if there is a cyclone or a natural disaster happening. Having formal savings will help with the rebuilding after this climate event. But also, as it says, it's a great way of diversifying risk rather than having everything in, for example, livestock or saved through, for example, buildings or any other type of physical investment. This is a way of diversifying risk, especially in the eye of climate impacts. Access to credit, this is a very interesting point to further go into, and I will later in this presentation. So having access to credit could either enable individuals to have investment in low carbon technologies. I think in the case of Eswatini, especially access to small scale solar panels or better irrigation systems, especially low carbon technologies like generating energy without emitting greenhouse gases, but could also be used to reconstruction after a climate disaster or investments into more resilient housing and agriculture. And this is the part that I find very interesting, providing credit for specific purposes to build the resilience for a climate event. So if we look at Eswatini, I know that there's an increasing drought in the country and a heavy reliance also on the agriculture system. So having small-scale farmers being able to invest in better irrigation system or a more efficient water use in the agriculture or even water storage facilities could be something very interesting to look into. But also to have more resilient housing and infrastructure that can withstand different types of natural disasters. Insurance, I think that is a very clear one, and it's growing massively globally right now. So having even small-scale insurance for MSMEs, for small-scale agriculture, or for individuals that can protect them against extreme weather events or gradual climate change. There's also emerging evidence that, and it's not yet, it's so emerging that it's not even in this presentation yet, that having access to payment systems is a great coping mechanism for individuals when there is some type of natural disaster, for example. And in that case, payment mechanisms that wouldn't be tied to going to an ATM and getting out money. So for example, mobile money could be a very interesting thing to explore also as a coping mechanism after a cyclone, for example. All of this, and this is why we have DFS at the bottom, all of these savings, credit, insurance payments can be enabled through digital financial services. Some of them are already, and I know there's a great interest to explore this even more. Okay, dear colleagues, at this point, I will take a pause. I've been speaking a lot. We still have another 20 minutes to go. I'm just opening the chat. Yes, so can we find the presentation on the site? Yes, there is a link to the presentation that will be shared afterwards as well. If you have any other questions to me about what you heard so far, Jen, could you go to the next slide, please? Or Laura, yes, thank you. Then feel free to ask them in the chat or to raise your hand. I would also ask my colleagues to be on the watch for me if there's any hands raised right now. If everything is clear and you don't have any questions, please post a no in the chat box. Okay, thank you very much, Pasha Swane. I can see a no, that means everything is clear. Thank you. Another one, I have more of them. Okay, can you expand more on the concept of inclusion? Yes, that is coming from Isaac Ladla from, if I'm not wrong, the Environment Authority. So inclusion, as we see it, we work with financial inclusion. So that is access to savings, credit, insurance, payment systems. And in the AFI network, we do not have one definition of financial inclusion because it's always tailored to the national context. And we usually do not look only at inclusion as in having access to a bank account and that's it, but it's both about the access, it's about the usage, and it's about the quality of those services. So that's the kind of parameters of how to explain inclusion. And maybe I'm here prompting Nomsebo or Prudence, maybe you would want to share if you have a formal definition of financial inclusion in the Eswatini context. I think that could also be very helpful. Maybe just to say on the inclusion side of inclusive green finance, as I said earlier, green finance can be green bonds, large-scale mitigation. It's something that's been discussed a lot within the green finance space. But what we mean with inclusive green finance is green products and services, resilience building products and services that are aimed at individuals or MSMEs. So rather than the large scale or the capital markets, really going for the individuals and MSMEs. So that's how we define inclusion in relation to inclusive green finance. Nomsebo or Prudence, would you want to share a financial inclusion definition in the Eswatini context?
Good morning, everybody, and thanks, Johanna. From our NFIS, the National Financial Inclusion Strategy 2017 to 2022, our initial definition of financial inclusion was, and it still is, financial inclusion refers to the delivery of financial services and products in a way that is available, accessible, affordable to all segments of society, and plays a pivotal role in combating poverty and contributing to inclusive economic growth. Then we went into the 3 dimensions, as mentioned, of financial inclusion: the access and the usage, the quality. But for those that don't have, the strategy is on the Center for Financial Inclusion website. But that's our definition of financial inclusion. And I think Prudence would add if I'm using the wrong one.
Thank you so much.
Correct, Sebo.
Thank you, Prudence, and thank you, Nomsebo. I think that's very helpful also to bring this down to the context in Eswatini. So unless there are other questions, we will continue on our journey into understanding inclusive green finance together. So please, Jen, Laura, can you bring us forward in the presentation? So the 4P framework on inclusive green finance, and if it's been very theoretical up until now, bear with me, because this is when we get into the examples. So this is, when we started working with this, we say, okay, financial inclusion can build resilience to climate change. It can enable mitigation of climate change. But how do you advance this as a regulator? How do you advance this from a policy perspective? So we started looking around the AFI network, documenting what type of policies were there. And we found that there were 4 different types of policies, and thus we created the 4P framework of inclusive green finance. This is not a framework that might look exactly the same in 1 year or 2 years' time, but this is work in progress, and this is what we found so far. So let me share with you. We start from promotion, then we move into provision, protection, and prevention. And in specific countries, you can choose to work with all of them. You can choose to work with some of them, but the one that you for sure will need to work with if you want to advance inclusive green finance is promotion. So let me first go into what promotion policies mean. So the formal definition of promotion policies is policies and initiatives that create awareness and incentivizes action from the private sector to offer financial services for green projects or any related climate action activities to qualified beneficiaries. This is usually the first step. So what we're doing right now is actually a promotion policy. It's about the regulator, and bear with me because all of these examples will be from the perspective of the regulator and the policymakers. So it's about building capacity, making sure everybody understands what are the risks to the financial system, what do you want to achieve, and what will climate change mean in your specific national context. It's about awareness raising, making sure that everybody is aware of these risks. In some cases, using moral suasion from the regulator's perspective to convince the private sector to move forward with specific initiatives or start, for example, implementing different guidelines to take into account environmental related risks. It's about data collections. And more importantly, it's not in here, but it's also about definitions. So have joint definitions of what green means in your national context. They can be a broad definition, but what is more useful is to go down more granular and actually start saying, okay, what are green products and services in our national context? Because that also enables you to then move forward with specific policy developments. I'll give you a couple of examples from across the AFI network. For example, the Philippines, Banco Central ng Filipinas, they have appealed to commercial banks to recognize the business case for green lending. And BSP has also sought to fill knowledge gaps on green lending and investment for commercial banks and other financial institutions, primarily through capacity building activities. So that's very much building a joint understanding, appealing to starting a specific activity, and then building the capacity to make sure everybody's on the same page. Bank al-Maghrib from the central bank in Morocco, they initially encouraged a voluntary approach by the banks and focused on sensitizing the financial sector to the benefits of sustainable development and the risks of climate change. But it has also supported training on green finance with the Moroccan Banking Association. So these are just a couple of the examples we see. When it comes to definitions of green, we see some really interesting examples coming out from Mongolia. They already have what they call a green taxonomy in place. We see initiatives by Malaysia and also initiatives by the Bank of Thailand, and the EU currently also has a green finance taxonomy halfway through its decision-making process. So these are the first steps you need to take in order to advance inclusive green finance. And my colleagues will be sharing in the chat a specific knowledge product we put together only on promotion policies, so you can see the examples there. The next P is a little bit more concrete. It's provision policies. The definition is policies help to ensure financial resources for green projects or any related climate action activities are provided to qualified beneficiaries, whether through lending policies, refinancing, or other financial schemes. So it's providing for green purposes or for resilience building purposes. In this category, we see lending quotas, as for example, implemented by Bangladesh Bank, that has a 5% annual disbursement target for green finance since 2014. So it's not a mandatory target. I think they're currently at 3.5% execution, but the target is 5%. And how commercial banks are reaching this target will also be affecting their CAMELS rating. So there's also incentives built into this specific lending quota. We see a lot of refinancing facilities, both for recovery and reconstruction after natural disasters, but also refinancing facilities for green lending. And also we see some priority sector lending, for example, in Jordan, or Nepal Rashtra Bank has priority sector lending requirements and has directed all commercial banks to dedicate at least 10% of their portfolios to green energy, such as hydropower and other projects. Of course, this is green energy at large. It's not inclusive green energy, so it's not loans for individuals to install solar panels, but still there is a lending target in place. Also, we saw, for example, in Morocco, Innovation Investment Fund, so establishing a fund where there is specific resources going into fintechs, amongst other for renewable energy and energy efficiency. And also in many countries, we see other forms of financing schemes, maybe together with the regulator, maybe in partnership with one of the ministries in order to achieve specific targets. Then the next one is protection policies, and I think this we'll hear a lot more about today, but also very interesting for Eswatini. So protection policies, they try to reduce financial risks by socializing potential losses through insurance to credit guarantees, social payments, or any other related risk-sharing mechanisms. So climate risk insurance, will not speak so much about it because we have the Central Bank of Armenia with us today, and Annie will be sharing what they have done nationally, which is truly amazing, the initiative, and really interesting also in the Eswatini context. Credit risk guarantees for resilience building or greening in the agriculture sector. We see two examples, one from Nigeria and one from Ghana, and the Bank of Ghana will be sharing more information about Gearsal later today. But in this also, there are some policies related to disaster risk reduction. So mobile money for G2P payments after a disaster, but also there's been some policies like early withdrawal from pension funds after a disaster to spark rebuilding. Then the fourth P, so this is prevention policies. I believe this can also be quite interesting to you. And in this, there's only one type of policy. This is environmental and social risk management guidelines. And these are guidelines put in place on the national level, which all commercial banks potentially also other financial service providers should adhere to, either mandatory or voluntary. We see different in different countries. And these address the social and environmental externalities and risks of a financial institution's activities. So it's basically, in some countries, it's been done like a checklist. So for every credit decision over a certain target or under a certain target, there is a certain checklist that needs to be gone through in order to check that there are no big environmental or social risks related to that specific credit decision. We have a couple of really good examples on this, so happy to share. Maybe Jen or Laura, we could even share the link to the Bangladesh ESRM guidelines in the chat, because this can be quite interesting. These are the 4 Ps. We have a lot of more information on them, so if you're interested, feel free to check it out. So we've gone through what is climate change, the financial risks, inclusive green finance, the 4 Ps, how now to move forward, what would the next steps be? And we have seen a trend in the AFI network. This is still early days to share it, but we've seen a trend. Laura, please, can you move forward 2 slides? Yes, of the steps to take in order to start developing inclusive green finance policies. The first one is a shift of mindset. So starting to understand that climate change is a risk to the financial sector, to financial stability, maybe even to price stability, saying this is not only the responsibility of the Environment Ministry, but it is a collective responsibility. By you being here, I think you're already past that point. The second one, awareness raising amongst and capacity building of staff in both financial regulators and financial institutions. I dare say this is what we're doing right now, but this is only a start. If you want to move forward on this topic, for sure there's going to be a lot of capacity building to do within different layers and sectors. The next could be to assess specific climate vulnerabilities. Okay, in the case of Eswatini, droughts, storms, natural disasters, heavy rain, what are the other climate vulnerabilities? How will that impact specific sectors, specific regions, specific groups in society? For example, are there specific climate-related vulnerabilities amongst women or amongst youth? And then on the national level, engage in a dialogue and collaboration around these vulnerabilities, how to solve them, and how you could develop inclusive green finance to address these specific vulnerabilities. Related to the national dialogue, there would also be a national definition of what green means, not only in one word, but maybe even broken down into financial products and services. What are green and resilience building products in the Eswatini context? Then after that, you could move forward in either developing a national level strategy, integrating these considerations in the national financial inclusion strategy, or developing a green finance strategy or an inclusive green finance strategy. And then after that, moving into specific policies. So is it about developing an insurance scheme for the agriculture sector for climate risk insurance? Is it credit risk guarantees to build the resilience in the agriculture sector? Is it targeted green lending for specific purposes? Is it trying to build the resilience against storms by specific loans going to building the resilience of the housing sector? Or is it implementing ESRM guidelines? So this is usually the trajectory. This is just sharing what we see so far. In all of this, extremely important to consider women's vulnerability to climate change. Women are usually more vulnerable to climate change than the rest of the population. And you can build these considerations in from the start. Better understand how digital financial services can play a role in all of this. To try to understand what are the data gaps, how can you collect data, how can you build bridges over these gaps. Then also and then of course where we are right now with the COVID pandemic, might also be good to see if there are specific recovery packages or any other recovery measures nationally. Maybe inclusive green finance measures could fit very nicely in there as well. Next slide, please, Laura. So this is just to share how a couple of other AFI members have been approaching this. So a number of AFI members are already explicitly integrating climate change in their national financial inclusion strategy. Some others are doing it implicitly, and a lot of members are also developing separate national level strategies on climate change, green finance, sustainable finance. You'll hear from Ghana later that have very, very interesting sustainable banking principles in place, for example. Next slide, please. Yes, thank you. I am aware of time, and I'm aware that I took a lot of your time today. I'll just recoup a little bit of what I've been speaking about today by giving you concrete examples. So we can establish that in addressing climate change, you can focus on mitigation, which is reducing greenhouse gases, so reducing the contribution to climate change, or adaptation and disaster risk reduction. So adaptation is adapting to the already climate change impacts we're seeing right now or to future ones. And disaster risk reduction is reducing the risks before, during, after disasters. So we see a couple of examples from the AFI network. For example, the Philippines, the next slide, please. They have a lot of typhoons and indirect implications, including floods and landslides. They've been addressing this with a number of different examples that you can see here. Next slide, please. We see in Nepal, they also have, typhoons and direct, including floods and landslides, and they created specific refinancing facilities to address these. Next slide, please. In Fiji, they have a lot of cyclones and also related to flooding after these cyclones. They've established a disaster rehabilitation and contamination facility. They've rolled out climate risk insurance, and they use mobile money for social payments after a disaster. Next one, please. In Nigeria, they are experiencing a lot more droughts, especially in the northern part of the country, and they established anchor borrowers program that link smallholder farmers with large-scale processors and subsidies to incentivize bank lending to smallholder farmers facing climate risks. But they also established NIRSAL, which is a very similar credit risk guarantee as the one we will hear later about from Ghana. And then we have two more slides that relate to mitigation, so how to reduce the impacts of the contributions to climate change. You see examples from Bangladesh, like the green banking guidelines, refinancing facilities, and lending quota for green purposes. Nepal have also directed banks for a specific lending target, refinancing facilities, and they have developed and implemented ESRM, so environmental and social risk management guidelines. And then you also see, next slide, please, examples from Jordan, from Egypt, and from Morocco. Next slide, Laura. So what have we done? What is climate change, the impacts, the risks of climate change to the financial system, the role of the regulators, inclusive green finance, the 4 Ps of inclusive green finance, how to move forward, and then a couple of direct examples on specific vulnerabilities and how to address these or how to mitigate against climate change. These are just a couple of examples, but I think what is important is to really have a focus on the human beings, because climate change is indeed experienced globally and will have massive disruptions across a lot of sectors. But what is important to remember is that the most vulnerable, the poorest, the most exposed in our communities will be those bearing the brunt of climate change. And that is what inclusive green finance tries to address. Of course, this also links to the Sustainable Development Goals and to the implementation of the Paris Agreement. And I'm sure the representative from the Ministry for Tourism and Environment will be addressing this in the next session as well. But with this, dear colleagues, thank you so much for your attention. If you have any questions, feel free to share them in the chat. I will be answering you directly in the chat. And if anything is unclear, feel free to drop me an email, to be in touch with anybody from AFI in the team, or to just chat to us during this training. And of course, this presentation is available. You have loads of material shared with you also in the chat of the training. So thank you so much.
Thank you so much, Johanna, for that very informative presentation. And to quickly cap the presentation on inclusive green finance, let's just do a brief quiz. Okay. Okay. Please log into www.menti.com and use the code 9097982. Okay, we see people coming in the Menti. Is everyone in now? Okay, one more. Okay. Oh.
I'm sorry, Jen, if you mind. I think we could do the quiz just on the start to session 3 and now go over to the welcome remarks, if that's okay.
Okay, so, okay, no problem. Okay, so to proceed further with the session before we come back to the quiz, we are honored to have with us today the Kingdom of Eswatini's Finance Minister, the Honorable Neil Rickenberg. It's a pleasure to have you with us today. Welcome, Minister Rickenberg.
Thank you very much, Program Director. I'll then proceed. I do have some remarks and some speeches. Thank you so much for having me. Thank you so much for everyone is doing here. I'll then proceed with what I have to say. Thank you to all. I see it's quite a big group that we have here. So Program Director, Governor of Central Bank of Eswatini, the Principal Secretaries, AFI Executive Director, AFI Management and Staff, Chief Executive Officer, Central Financial Intelligence and Staff, Chief Executive Office, Financial Services Regulatory Authority, FSRA, and the staff from there, Minister of Finance officials, senior government officials, CFI staff, distinguished guests, ladies and gentlemen, and most importantly, for those that are here and even those that are not, the people that we are making these policies for on their behalf. Good morning to everyone. It's a great honor for me to be before you today as we partner with the Alliance for Financial Inclusion on a very important subject matter for the development of the Kingdom of Eswatini. It has become evident that, that to go on with our lives ignoring the environment and in particular changing climate conditions is not wise. Life as we know it has changed significantly. The winters are colder and the summers are hotter than usual. If we and the next generation are to have a future, we all need to stand up and act now to address these issues. While some of us might not be environmental or climate experts, we can use the tools at our disposal that we have to do our part in this crisis. One of Eswatini government's key slogans are, the soil is our greatest asset, therefore conserve it. And you will find it written all over in as a government slogan. Climate change and environmental degradation is the most challenging issue of our time. It is happening today and it's affecting all economic sectors across the globe. The Kingdom of Eswatini, even though we are small, we are not spared from this. Thus, we must take this issue seriously and include it as one of the key considerations in development planning, regardless to which sector we belong. It is our duty under the Sustainable Development Goals to ensure that we preserve the earth. The impacts of climate change and environmental degradation are unprecedented and continue to threaten key economic sectors. It presents material risks to long-term financial stability, as well as affecting our citizens, especially the poor. In our country alone, we can feel these impacts, including floods and droughts brought about by the increasing global temperature and changing precipitation, which are impacting our key economic sectors. We will know more of these vulnerabilities in one of the sessions when the Minister of Tourism and Environmental Affairs will present our country's climate challenges and the policies we have. Not to preempt the presentation, but I'm aware that Eswatini has ratified the Paris Agreement and has communicated its nationally determined contribution, which embodies our commitment to the global climate goals. This is also our national desire to increase adaptive capacities to combat the impacts of climate change. Furthermore, I'm informed by my counterpart, the Honourable Minister of Tourism and Environment, that we also have our national climate change policies and biodiversity strategy, which encompasses an action plan. These are in place to sufficiently guide us in combating climate change and environmental degradation. We cannot ignore the issues of climate change as we move on with issues of access to finance. To advance these national policies, it is imperative that we have both the financial sector players and the environmental sector players under one roof, as we have a common goal, preserving our future through responsible finance. While the climate and environmental related agencies take the lead in the implementation of these plans and actions, the financial sector plays a critical role in driving a resilient and low carbon development pathway. Public finance is critical in climate action, but the private sector is an equally important player in creating green economies. At the global landscape, the Intergovernmental Panel on Climate Change, referred to as IPCC, reported that an estimated $1.6 trillion to $3.8 trillion investments to transition green energy supply alone, while the Global Commission on Adaptation estimates adaptation costs of $180 billion annually from 2020 to 2030. I'm told that as a country, we do not have figures to benchmark ourselves against. These global figures are an indication that as a country, we need to embark on an assignment to conduct a study and determine data for funding requirements. This will ensure that both the public and private sector work together to pool the resources necessary to help combat climate change and environmental degradation. Most importantly, we also aim for inclusive development. As we progress our plans and actions to create green and resilient economies, we don't want to leave anyone behind. The financially excluded needs access to financial services to build their resilience to climate change, because they are the most hard hit when there is turbulence in this whole system. While the COVID-19 global pandemic has effectively halted economic activities across the world, it presents an opportunity to advance the green agenda to build back better. As we were in lockdown and everyday life as we know it has been halted, the environment seemed to flourish as there was less emissions and activities during this time. It is opportune that we begin to explore the opportunities and potentials of the post-pandemic recovery and together lead it towards a more resilient, sustainable, and low carbon pathway. I've said a bit much, but this is the area of a great passion for me, as I'm a farmer, like most Eswatinis, and we all rely very heavily on the environment. May I congratulate the Alliance of Financial Inclusion and the National Financial Inclusion Task Team on this erstwhile endeavor to ensure that we provide access to finance in Eswatini that is cognizant of the environment. This needs to be a first step for the creation of a more inclusive, a greener, and more resilient Eswatini with support from the financial sector. Thank you all for your participation, and may you have a wonderful learning session and exchange of ideas. Thank you so much.
Thank you, Minister Rickenberg, for the very inspiring message and for echoing what financial inclusion represents in the National Development Agenda and climate objectives. That slogan, "The soil is our greatest asset, therefore conserve it," is indeed the core of climate action and environmental preservation, not just for us, but for future generations. And finance indeed has a huge role to play in driving resilience building and low carbon development, while financial inclusion helps to ensure that the most vulnerable are not left behind in the process. Thank you very much for, once again, Minister Rickenberg. And now, thank you for joining us today. And now to proceed with our presentation, maybe we come back with the quiz later on after this session. We're on now to climate change and environmental challenges. This session will provide us an overview of the climate change impacts and environmental challenges in Eswatini, which are critical when discussing inclusive green finance and green finance in general. We'll also learn about the country's climate change and environment-related policies, which can be complemented or provide a basis for further IGF policy developments. So in this session, next slide, please. We're lucky to have with us today Director Dudusil Masina from the Ministry of Tourism and Environmental Affairs. Over to you. Welcome, Mrs. Masina, Director Masina.
Thank you very much, Jen, and thank you for the warm welcome. I am not sure whether I am going to share my screen this side or it's going to be shared for me on your side. Whichever is okay from your end.
Let me share my screen.
Okay, thank you very much. Honorable Minister, the Governor of the Central Bank of Eswatini, and all protocol observed, it is a great pleasure for me to have this opportunity to make this presentation. The presentation that came before was a very, very enlightening presentation to me also. One might say I am coming in here as a resource person, but it has been quite a pleasure to learn also. The issue of inclusive green finance, as it has been said, it's a relatively new concept to most of us. While inclusive finance might have been there, and the green financing has also been there, but also still relatively new, the interface of this is something that is of interest to us and is quite interesting. Can we move to the next slide? In Eswatini, as the Honorable Minister has indicated, we are committed to taking part in the global initiatives to address climate change. And as a result, not only are we party to the United Nations Framework Convention on Climate Change, but we are also party to its Paris Agreement. And because of that, we submitted our initial NDC. NDC stands for Nationally Determined Contribution, which is what became our commitment under the Paris Agreement. What I like about this terminology is the national determination, which to me ties up very well with the issue of inclusiveness. And as we prepare, we are at a point now, maybe just I will come back to it later, we're at a point where we are updating our NDC. But as we are doing that, we continually talk about inclusiveness and about leaving no one behind. And the issue of inclusive green financing is what will ensure that we don't only leave nobody behind in terms of planning the commitments we will have as a country, but also in terms of implementation. Climate change is something that cuts across all sectors of the economy. I think Johanna has already talked about adaptation and mitigation. And before us, we see just a brief summary of the adaptation and mitigation commitments that the country put before the Paris Agreement. And for us, it's not just what we want the world to see we are doing, but it's also what Eswatini deprioritized as areas that we need to take urgent action in. With regards to biodiversity and ecosystems, we committed to having more areas preserved. We committed to just ensuring that our biodiversity is in a state that will work for us, despite the fact that climate change is affecting us. We want to scale up our investments in ecological infrastructure, establish long-term biodiversity conservation, have a landscape management and natural resource management programs. A lot has been done in this area. However, there is quite a lot more to do. A recent one, Honorable Minister, it was the approval of the OECM, which is other effective measures of conservation, which allows the country to put more areas under conservation. We believe this will ensure that we protect these areas and make sure that they are hit less by climate impacts that come up, while at the same time they assist us with dealing with climate change, because as we know, our forests also take up carbon dioxide, which is one of the greenhouse gases. There is also the water sector, and under the water sector, we committed to having to synchronizing the water legislation framework with the climate change policy and strategy, which the Honorable Minister has already referred to. And in addition to that, we want to develop a water pricing structure and measures to reduce water consumption. In addition to strengthening early warning centers and integrating water resource management across all sectors. There is already ongoing work in that regards, particularly with regards to groundwater and also water pricing structure. And also a lot is being done to see how we can deal with our water, and water is becoming increasingly a scarce resource. Maybe just talking from the actual meteorological aspects with regards to what is happening, we are seeing gradually increasing temperatures in the country, while the rainfall also is gradually on the decline. This combined is affecting the amount of water available for us. And in addition to that, I believe those economists amongst us will agree with me when I say, as we develop the water needs per capita is increasing, and we have our development plans that need us to have water available for us to support that development. So we really need to put in adaptation measures in place to ensure that what we do with the water sector is cognizant of what is happening within the climate space, and be in a position to make sure that we minimize the negative impacts. And then also in the agriculture sector, we also made commitments there, but mainly we looked towards ensuring that the contribution of agriculture to the economic development is increasing. And in doing this, we want to promote sustainable use of natural resources, among other things, and also deal with disaster. I think Johan talked about the relationship between adaptation and disaster management, and it's a very important intersection for us. And it has been quite encouraging to learn that in recent years, despite all the changes that we are having in our weather patterns, the agriculture contribution to GDP, there has been a realized increase there, but there is a lot more that needs to be done, and this is also covered in the country's plans for development, wherein agriculture has been prioritized, and agricultural production, and also ensuring that we do not only just produce, but we also do some value addition. So this is something that is important for us to ensure that agriculture is adapting. And in terms of initiatives, among others, there has been introduction in various areas of climate smart agriculture initiatives. And also where we have had a project that is introducing the concept of market-led agriculture alongside the climate smart agriculture with farmers in the communities. This is something that can be rolled out to ensure that we maximize what we have while we minimize the impact that is coming from the climate systems. And then on the mitigation front, in addition to trying to make sure that we have comprehensive MRV systems, I think the Honorable Minister would agree that they have seen us coming up with a lot of requests to get support in MRV. But I will just go into the sectors that are actually action on the ground, where within the energy sector, we had committed to have to increase our renewable energy mix in the electricity mix to up to about 32% by 2030 compared to the baseline of 2010, which is something that we believe can help assist us in various aspects. Probably I will come back to some of the aspects later, but someone might ask that because we know that there is also the other thermal generation that is coming up. We are working with the Energy Department and other relevant partners, and we have looked into that. And so far, we are afloat with regards to our NDC commitment. But most importantly of all, even within that power generation, a lot has been done to ensure that we minimize any negative impacts that may come from it in terms of minimizing the emissions and minimizing the water demands that are coming from there and minimizing pollution generally. In the transport sector, Honorable Minister, we had committed to blend 10% ethanol to our fuel by 2030, having that commercialized. We believe this will help us in terms of the costs that we are spending on fuel in the country and also reduce the emissions. And work has been done in this. I've been made to understand that the policy framework for that is already in place. And what is left now is to mobilize resources to actually have the plants that will be doing the actual ethanol blending and making sure that all the infrastructure that is needed is in place. Another area that we had committed is the ozone depleting substances, their replacement, and in that space, what has happened so far is the amendment of the Kigali is the ratifying of the Kigali amendment, and this has now put us in a space where we are now starting on the development of the legislative framework in the country to ensure that indeed we can replace the gases that were used to replace ozone, but are contributing to climate change globally. Next slide, please. Now coming to the challenges, Johanna talked about the different kind of risks that we have, which included physical risk and transition risks. And I think what I am about to talk to here covers some of that. And thank you, Honorable Minister, for bringing up the Umhlaba Impilo Yethu Wonke, which is the soil is our greatest asset, help conserve it. I had also brought that up because with climate change, one of the things that we are seeing in an increasing rate in the country is land degradation. And that slogan still stands for the country, and it's one of the things that we would like to uphold and make sure that even our young generation don't forget about it. It keeps going on throughout all the generations. However, a lot needs to be done in that space. I already talked about the commitments that we have done to lend to our biodiversity. Our biodiversity cannot come anywhere without land preservation. Our agriculture cannot thrive without land degradation. And there is a lot that we can lose if we allow land degradation to continue. However, at the moment we are seeing that, and it's a space where there is a lot that needs to be done. And then there is the issue of the water scarcity, while the demand is increasing, that I have talked to. And this has potential to affect our development, including the hydroelectricity, which is one of the electricity generation aspects we have as a country. And I think we will all agree that without sustainable energy, we cannot develop. Another impacted area is the agriculture, water, and energy nexus area. Without our agriculture, food security will continue to be a problem. Poverty will continue to be a problem. And as it has been said before, those that are the poorer amongst us will be more hard hit. And these are areas that we need to invest in, both in terms of climate change adaptation. And then we are also having impacts in biodiversity. However, this there is a lot of interlinkages between the actual weather and climate impacts and the impacts that are coming from the developments that we are doing. So there is need for us to actually take care of our biodiversity. It starts with making sure that our land use is we think about it appropriately to ensure that the areas that are needed to make sure that our biodiversity thrives are there. The areas that we need to make sure that our waterways are maintained in order to manage all the biodiversity, both animals and plants are there. And if we do not do this, it will continue to have a negative impact on our culture and in turn our tourism, which is based mostly on our culture. For instance, if our waterways are not taken care of, we will lose our reeds, and then the question is what happens to the reed dance. This is just one example. We are also a country that has a lot of biodiversity, including bird life. But if we do not take care of our wetlands and so on, we'll also lose that, and that has impacts on tourism. And then disaster risks. I think I have already said a bit about what is happening in the climate sphere. One of the things that we have seen in recent years was the droughts that we saw. They came up with a lot of disasters in 2015-16, but also we are increasingly seeing a lot of variations which are leading to extremes. Just this year, we saw the impacts of tropical cyclone Eloise. This is something that has not been common, but with climate change, it's predicted that we might be receiving more of such, and also apart from just tropical cyclones, but more heavy rainfalls, and this results in disaster, and it affects our infrastructure, which also we need to work on. And Honorable Minister, we are currently working on our second nationally determined contribution to be submitted later this year to the Convention on Climate Change, and these areas are some of the areas that we have prioritized as we're discussing with stakeholders on what can be put as commitment. Infrastructure, both from a mitigation and adaptation perspective, is one of the areas. Can we go to the next slide, where we are just going to look at the emissions we are having as a country. This is up to 2018. We are seeing a gradual increase, mostly coming from our agriculture, forestry, and other land uses. And also our energy has been more consistent, even though there are internal variations, but we are expecting to see an increase in this as we start generating our own electricity. Next slide, please. This next slide is just showing the details of where the various emissions are coming from in more detail. And as we are developing our NDC, our revised NDC, we have also prioritized agriculture, including not only from an adaptation perspective, but also from a mitigation perspective. We have noted that most of our emissions, or that a significant amount of our emissions is coming from the livestock sector, and livestock is it's the gold for a lot of Eswatini. But Honorable Minister, as we're working on this, ours is to say where are the most emissions coming from our livestock, and how can we optimize? And we believe this will not only reduce livestock, but it will come up with options to optimize our livestock sector so that it has a greater input into the economy. Next slide, please. Here I am just talking, I didn't plan to go into much detail, but on what Johan termed the transition risks, because as we are also committed to reducing emissions, there are some impacts that come in there with that. We are talking about reducing emissions. I have already talked to the livestock sector. There is also the other sectors. We talked about renewable energy earlier on, and there is efficiency, also energy efficiency that is coming in there. But all these issues interlink with development, and we need to ensure that we understand these risks that are coming in just with having to do this. But also, if we do our cost-benefit analysis in a proper way, we might be able to come up with a case for mitigation, which will not leave mitigation just as something that is government-driven, but have the private sector and everyone be in a space where the mitigation is making sense. And then there is also, we also need to have awareness from everyone. For me, this platform is quite important platform because we need to have a buy-in from all players, including the financial sector. Can I have the next slide, please? Before probably I end, one of the questions that I was asked to address was what strategies and plans are there that will help us in terms of the climate financing. Currently, we do not have a legislation for climate change that is covering climate finance and so on, but there is a development of a bill that is ongoing, and climate financing is one of the critical elements. But just last week, we launched our Green Climate Fund country program, which is an important space for us to take into consideration as we deal with climate financing. It has adaptation and mitigation, which is on the screen. I will not talk much into, but it also has a space for where a space that is cross-cutting, where we have issues such as agroforestry covered there. For me, this is talking. It's a country program that we have prepared for our interaction with the Green Climate Fund, which is one of the big green finances that are available globally. But I do understand, and we all need to understand that this is not all that there is to it. There is a lot that in the space of green finance that we can talk to. Can we go to the next slide, where I will just highlight that while preparing this country program, we did not look only into the priorities for the country, but we also tried to create an enabling environment where we started preparing for having accredited entities that will help us access this green climate finance with Environment Authority and Eswatini Bank. I'm not sure if Eswatini Bank is here with us, but Environment Authority is here. Two of the entities that are working on the accreditation, and we are also now, but this is, we also discussed the issue of having a national fund, green fund, climate change fund, and the recommendations here were either to upgrade an existing fund to be a climate fund, or to have a new fund altogether. But there are recommendations that dealing with an existing fund might make it easier for us to access because of the requirements that are there with the finances that are there. I've already talked about the bill, and now that lastly, it's the important thing to understand that green finance is not only about the GCF. We need to green as much of our financing streams as possible. And I am happy that we are talking about inclusive green financing, because for me, this opens an opportunity for us to think about how we can green the various streams of finance that we have in the country. I think, can I say the last slide? But I think this is probably the end of how far I thought we could go with this. Otherwise, we as a ministry are very, very grateful for this opportunity, and we look forward to ensuring that the green financing goes beyond the Green Climate Fund. It goes also into domestic funding, and we are able to do it in a way that will allow us to implement our commitments and beyond that, and in a way that will allow us to ensure that our climate action is not just purely for climate action, but is also supporting our sustainable development. Thank you very much.
Thank you very much, Director Messina, for walking us through the country's commitment to the Paris Agreement and providing us the details of the national climate objectives, as well as the financing strategies and plans in place. Now I can see, do we have questions for Director Messina? If there are no questions, please type no in the chat box. Okay, so I can see no coming up. So now we proceed for a quick quiz on Menti. Okay, so as a break, let's do a quick quiz on Menti with the one that I presented earlier. Okay, so please go to www.menti.com and use the code 9097982. Okay. Okay, before we start with the Menti quiz, we have 2 questions coming up in the chat box for Director Messina from Dalton Camiso. Is there still an opportunity for other financial institutions to be accredited, and what is the process? I think is referring to is this referring to the Green Climate Fund?
I think this is referring to the Green Climate Fund. Yes, in the climate space, there is a lot of space for all of us to play. However, as a country, we thought it would be good to start with 2 and then see how it goes, because it's a space where there is investment that is needed to get into the accreditation space, and there is some payments that you do for the accreditation, and then we need to make sure that we have the proposals coming in to access the Green Climate Fund. But if we are sure that that is happening well, there is a lot of space for all of us to play. But then also depending on how we structure the different our financial mechanism in the country, we might find that even other financial institutions are able to play, even though they are not accredited entities, because depending on the various instruments that we work with, there could be room to play. I just didn't mention that the GCF has different financing instruments, which include grants, concessional lending, guarantees, and investment and equity investments. So depending on how we structure our institutional financial institutions, there could be room for us all to play. And if we are able to get the financing flowing, then we could have more coming in.
Thank you, Director Messina. And then there's another one. Maybe let's take this question and then we'll ask Director Messina to answer other coming up questions in the chat box. So does the country have, there's a question here from Fasha Zwane. Does the country have a national action plan for climate change adaptation or mitigation? Sorry, you're muted, Director Messina.
Sorry about that. Yes, we do have an action plan, but our action plan is due for revision, and it's due for updating, and it's one of the things that we will be starting doing. There have also been delays with COVID and other things coming on, but it's something that we should be revising very soon. But the plan is there. I think it's available on the government website, but if not, we can still share it, but it's come to an end actually. And then also when I did the presentation, I did like under the adaptation, there is also what was the NAP, which I didn't talk into, which is the National Adaptation Planning. That one it's also a plan that we are currently working on. We are hopeful that maybe by next year sometime we will be having that one. Hopefully before then we will have that one, then we can it can be available for all. But also in preparing it, we are touching base with a lot of stakeholders, and it would be interesting for us to have all the stakeholders that we have here, because also when we have the plan, we need the financiers to also understand the plan and have it as something that they can work with, because as I said, financing is important for implementation. Thank you.
Okay, thank you very much, Director Messina, for that. And in the interest of time, I think we're skipping the quiz for this time, and then we proceed to the next session. But we ask Director Messina to please reply to 2 more questions in the chat box. Thank you very much.
Yes, I'll do that. Thank you.
So, we're back on the session for the Journeys on Inclusive Green Finance. For this session, we have with us 2 AFI member institutions, the Bank of Ghana and the Central Bank of Armenia, to share with us their experience about IGF policy development. We get to learn more about their specific policies in which the Kingdom of Eswatini might find relevant in its policy development objectives. Again, if you have questions, please post them in the chat box and we'll ask the speakers to address them after the presentation. Our first speaker is Mr. Osei Gyasi from Ghana. Mr. Gyasi has 29 years experience in the central banking environment, and as an internal auditor, financial professional, and a bank supervisor. He is currently the head of Banking Supervision Department of the Bank of Ghana. Welcome, Mr. Gyasi.
Thank you, Madam.
Please go ahead.
Good morning to everyone, all the participants, all our colleagues. And I want to thank AFI for this opportunity, and also thank them for this program. We are proud to associate with AFI, and also proud to be given this platform to share our experience with our colleagues around the globe. Yeah. So good morning once again. Yeah. Yes. This presentation is going to give participants and our colleagues an overview, a summary of Ghana's sustainable banking projects. And the outline will be in the form of an introduction. We'll give some context, policy development process, overview of the principles, potential benefits to banks, next step, then conclusion. Yeah. Why is sustainability concept within Ghana's banking industry? Banks finance projects and activities, and in so doing, such activities could pose some risk to the country. It could have adverse impact on the climate, and also there's the risk of potential adverse climate changes, which could result in some environmental and social challenges. Yeah. What has been done so far? We had to go through what is known as a policy development process. As part of Ghana's commitment to the UN Sustainable Development Goals and the UN Framework Convention on Climate Change, and in line with our national development plan, the Central Bank of Ghana had to collaborate with other state institutions like the EPA, the Environmental Protection Agency, the Association of Bankers, to develop a set of banking sector principles in the area of sustainable banking. So what I'm saying is that the central bank had to lead the process, and in so doing had to bring on board other state-owned institutions. Yeah, and this was done in line with our national development plan that had been set for the country. Next slide, please. So as part of the policy development process, a committee was set up, and just as I indicated earlier, the committee was made up of Bank of Ghana, Ghana Association of Bankers, and the Environmental Protection Agency. These were the key stakeholders. But in the process, we had to bring other institutions on board as and when needed. For instance, we had to bring PwC on board in the course of the project. Yeah, we started the whole project by developing concept notes, and we had some initial engagement with all stakeholders. We had to leverage on the experiences of some other countries and some institutions in some other countries. For instance, we recognize the fact that the Kenya had developed this sustainable banking principles and had practiced it over a period of time, and there was no need for us to reinvent the wheel. So we had to leverage on the experiences of Central Bank of Kenya and the Kenya Banking Association and other countries. Besides sharing knowledge and comparing notes, we had to pay visits to some central banks, and this time around it was the same Bank of Kenya and Bangladesh. Yeah. We also had to do some consultations with some other external stakeholders, and this included IFC, SECO, UNEPFI, and CBN, and AFI. Yeah. Next, please. Then after that stage, then we needed to draft the principles. So we had to go through drafting process. We had to administer questionnaire and also do some kind of benchmarking. We had to do public consultation on the document, and we consulted academia. We consulted some other institutions within the country, besides those major stakeholders we identified earlier, and to bring their views to bear. Then, after we had gone through all these stages, then we came to the main activity, and that involved the drafting of the principles, the 7 principles based on the 4 Ps. And at the same time, we had to come out with guidance notes. And this was launched in 2019. Yeah, so the principles were launched in 2019. Then we also had to do capacity building across the country, and this time around we had to build capacity of bank senior staff. We had to bring managing directors on board, CEOs, and even capacity of some university lecturers, and the regulators were not left out. We had to design specific programs to build the capacity of banking supervision staff, financial stability staff, and other supervisory departments within the bank. Then we recognized the role that AFI, Central Bank, and Supervisors Network could play and green financial system. So we had to affiliate with these institutions for them to assist us in the implementation of the project. Next slide, please. So far, this is what I've spoken about, the methodology. You can see the first one, formation of steering committee to provide strategic oversight, development of concept paper that articulates the vision, objectives, and sector framework, review existing performance in sustainable banking in Ghana, drafting of sustainable banking principles, guidelines, and framework. Then we had to review of the drafted sustainable banking principles and guidelines, review and launch training and capacity building for banks and supervisory staff, then implementation and monitoring. Yeah, next stage. Yeah, so this is an overview of the principles, 7 principles. And just as I indicated, these principles were based on the 4 Ps. And if you look at principle number 1, it talks about the banks to identify, measure, mitigate, and monitor environmental and social risk and opportunities in bank business activities. Promote good environmental and social governance practices in bank internal business operations. Yeah, for you to be able to promote good environmental and social governance practices, what it means is that you must have the principle 3, which talks about promote good corporate governance and ethical standards. Then the 4, promote gender equality. 5, promote financial inclusion. 6, promote resource efficiency and sustainable consumption and production. Then we talked about principle 7, report on compliance. Next, please. Yeah, so which areas, which sectors were we going to apply the principles? We identified these sectors: agriculture and forestry, construction and real estate, manufacturing, power and energy, mining, and oil and gas. Why these sectors? Because our analysis and evaluation that we did pointed to the fact that these sectors expose banks to material, environmental, and social risk. Next, please. So the question is, we really needed to sell to the banks to make them aware that adopting these principles was going to be very beneficial to them. And we articulated some of the benefits that will accrue to the banks if they went sustainability. So the first one was that it was going to enable these banks to attract investment funds from international financial institutions. These days, most international financial institutions will give funds to financial institutions based on indication that these financial institutions have adopted sustainable banking principles. So we articulated this to these institutions to enable them buy-in. We also indicated to them that sustainability will enable them to improve the quality of the loan portfolio. Why? because they will not find themselves financing activities that will endanger our climate and our environment. Most of these institutions that engage in activities that pose some kind of threat or risk to the environment do not live long. And as a result, loans and credits that have been extended to these organizations go bad, and it affects the quality of the loan book of these institutions. It will also impact positively on the credibility and reputation of institutions that adopt such principles and improve their brands. At the end of the day, the banking sector will be very resilient. It will also improve the risk management practices of the institutions that will adopt sustainability. Next slide, please. Then the next stage, after we have established the principles, then we had to do the implementation stage. How were we going to implement? There was a need for us to come out with templates. So templates were developed. And in developing the templates, we had to bring on board the institutions that we supervise, the institutions that were going to use the templates. Their views were brought on board. And let me indicate that IFC also assisted us enormously, significantly, in the sense that they put at our disposal consultants to help us to develop these templates, to review the work that we have done before they were sent to the bank. So as we speak, templates have been developed to capture key information from the banks on the implementation of the principles that we have adopted. And at this stage, let me also indicate that we also had to build capacity, because we had to sharpen the skills, knowledge, and capacity of the banks that will be administering and submitting these templates to the regulator. And we have to also build capacity at the same time for not just the banks, but for supervisory staffs as well, because when these templates come in, they would have to review the templates and do their analysis and come to certain conclusions. Next step, please. By way of conclusion, what we can say is that in the implementation of these principles, among other things, we expect that we will be able to limit the negative environmental, social, and governance impact on the banking sector in Ghana. We will be able to promote financial inclusion and gender equality. We'll be able to encourage the development of more sustainable products and services, and also further contribute to the sustainability of the financial system. We will also be able to limit the negative environmental, social, and governance impact on the banking sector in Ghana, promote financial inclusion and gender equality, encourage the development of more sustainable products and services, and further contribute to the stability of the financial system. Next, please. So on the sustainability, this is what Bank of Ghana has done so far. Let me say that by way of summary, the central bank had to lead the whole project. We had to bring on board other stakeholders. This has to be done in line with the nation's developmental agenda. And we also had to make sure that the necessary principles were developed, taking into consideration the views of all stakeholders. We had to build capacity, and we had to also affiliate with some international organizations. IFC had to support us. At the end of the day, the templates came out, they were sent to the banks. And as we speak, the first set of templates have been submitted to the regulator, and they are being reviewed. Once we finish with the review, we'll go back to industry and share our views and comments with industry with a view of helping industry to improve upon the next set of templates that will be submitted to the regulator. So I'm done with the presentation on sustainability. Yeah. The next one is GESL. What is GESL? GESL is an acronym, and it stands for Ghana Incentive-Based Risk-Sharing System for Agricultural Lending. Let me at this stage say that I have one Dr. Pra on the line. Dr. Pra was the one who was very instrumental in setting up GESL. I will do the presentation, and after that, I will invite Dr. Pra to make some comments and give some more information on GESL, since he was the technical person who was deeply involved in setting up a GESL. What is the nature of GESL? GESL is a non-bank financial institution. It was incorporated as a private company with the Ministry of Finance as the principal stakeholder. GESL received its seed funding from Bank of Ghana and the African Development Bank. Let me move to the next slide, please. Please go to the previous slide, please. Previous one, another one. Yes, yeah. This slide provides a context of agricultural financing in Ghana. In Ghana, about 44.7% of the labor force is engaged in agri. And also, agri contributes about 20% of the country's GDP. And 5% total domestic credit goes to the agri sector. So if you look at the statistics, what it tells us is that, agri is a major activity in the country, and it contributes significantly to GDP. But on the other side, what it means is that agri over the years has not been able to attract the necessary support from the financial sector. With this context in mind, we'll be able to know why the need for GESL. Can we move to the next slide, please? I've already indicated the full meaning of GESL, and I've indicated that it was incorporated as a private non-bank financial institution as a limited liability company. The objective of GESL is to de-risk agricultural financing by financing institutions through the issuance of agricultural credit guarantee instruments and also technical support. What this means is that you have GESL as a non-bank financial institution, then you have participating financial institutions that give credit to agri and agri-related businesses. But for this credit to be given, there's the need for an institution to give what we call credit guarantee. So GESL will come in to give this credit guarantee to participating financial institutions that stand ready to advance credit to agri and agro-related businesses, as well as their value chain businesses. So that is the position of GESL. GESL grants guarantee schemes to participating financial institutions, and this is passed on to agri and agro-related businesses, and the objectives are stated there. What are the key targets? The key targets which was set up or which was indicated for GESL was that GESL was to double current agricultural lending by the financial institutions within 10 years. So if the size of the facilities that was going to the agri sector was 5%, as indicated in the earlier statistics. In 10 years, the objective was that it should come to 10%. Then also to reduce the non-performing loans within the agri sector. Next slide, please. Let's look at the key strategic pillars of GACL. On the left-hand side of the slide, you have the de-risking instrument. The first one is risk-sharing facility. What I mean by risk-sharing facility is that at any point in time, GACL stands ready not to assume 100% risk by way of the guarantee that they issue, but to assume a portion of the risk that is associated with the credit that the participating financial institutions give to agri and agri-related business. And the maximum they can give, they can assume a 70%. So what it means is that GACL at any point in time is prepared to assume a maximum risk exposure of 70%. Then the financial institution will assume the 30%. That is why it is a risk-sharing facility. Then the next one is that GACL was to help develop the technical skills of banks and agri-businesses to enable them understand agri practices in Ghana, the associated risk, and to build their capacity and skills. And the last one is agri. On the right-hand side of the slide, you have incentive and enablers. To incentivize participating financial institutions, they must be aware of the benefits that will accrue to them. And these are the enablers. The first one is bank rating. The second one is bank incentive mechanism. And the third one is digital financing. So on the key strategies, you have 3 de-risking instruments and 3 incentives and enablers. Next slide, please. So the question is, what is the role of Bank of Ghana in setting up GACL? In 2014, the country Ghana experienced serious exchange rate challenges. And as a result, the currency depreciated significantly. So there was the need for steps to be taken to address the challenge. A study was conducted and it was realized that one of the factors that contributed to the serious exchange rate challenges was the fact that we're importing heavily. To mitigate that risk, there was the need for us to improve upon our export base. So a mechanism had to put in place to improve or increase exports. This resulted in setting up what we call the Exim Bank to support exports. But you agree with me that you cannot improve export if your production base is weak. So to improve on the production base, which will impact on our exports, we necessarily have to set up an institution that will also contribute to the improvement in export. And that brought on board GACL with the objective of resolving the forex exchange crisis that we're going through. So GACL was set up to provide guarantee credit schemes. We are aware that Nigeria had set up a similar scheme earlier, but our intention was to improve upon what Nigeria was doing, because Nigeria, besides the credit scheme, the central bank was giving direct credits to agri businesses, and we found this to be unsustainable. Next slide, please. So GACL was set up, and at that time, the paid-up capital, the minimum paid-up capital of bank had been set at 400 million Ghana cedis. So the decision was that GACL should be capitalized up to 400 million by Bank of Ghana. So Bank of Ghana started capitalizing GACL. Initial 400 million was given to Gesell, another 400 million, and another 400 million, 100 million, sorry, 100, and it came to 300 million as the capital, paid up capital for Gesell. Somewhere along the line, AFDB came in that they were going to give Gesell a grant. When Bank of Ghana discussed the matter with the Ministry of Finance said that they had a funding arrangement with AFDB, and under that scheme, AFDB could make some money available to Gesell, which was going to be bigger than the 100,000 grants that Gesell was going to receive from AFDB. So Gesell bought into that idea. But somewhere along the line, because Ghana had a program with IMF saw the capital that was given to Gesell as funding government, funding the fiscal authorities. So Bank of Ghana could no longer continue to grant further capital to Gesell. So Gesell capital then stood at the 300 million that had been given to Gesell. Then Bank of Ghana stopped lending to capitalizing Gesell. Gesell had then been set up as a company, a limited liability company. Its board was set up, and the necessary key management staff and resources were made available to Gesell. So Gesell in a way became an independent institution with its paid up capital intact, with its own board, with its own senior management personnel. And Gesell came up with operational modalities, which indicated how participating financial institutions can work with Gesell, how they will do their credit evaluation with inputs from Gesell. Once that has been done, then the participating financial institutions can now come together with application for the establishment of the credit guarantee scheme. This will be evaluated by Gesell, and if Gesell is in favor of the application that has been submitted after its review, then Gesell will approve. Then the participating financial institution, on the basis of the approval of the application, will now disburse the funding to the agribusiness or the agro-business, the necessary value chain applicant. The disbursement will be done to those applicants. Then a monitoring mechanism will be put in place to determine how the amount is being utilized. And Gesell has put in place a monitoring mechanism so that they will be able to establish the impact of their activities on agro and agribusiness, as well as the value chains. Let me at this stage indicate that Gesell brought an application to Bank of Ghana to request for how loans that are granted under the scheme will be treated for capital adequacy purposes. We discussed the issue and we agreed that Gesell was to be seen as public entity with revenue generating powers. And for that matter, we could assign a risk weight of 20% for purposes of capital adequacy computation. And this was agreed between the regulator and Gesell. So as we speak, for all credits that are advanced by participating financial institutions to agri and agri-related business, it attracts a risk weight of 20% for purposes of capital adequacy computation. Next slide, please. I have already indicated that the maximum guarantee that could be given for any business under the scheme is 70%. And this goes to the primary participants, those who are directly into agri. And the guarantee covers principal and not interest. Production-related agro-business are the ones that can get a 70% guarantee. Market-related will get 60% guarantee. Next slide, please. Gersel entered into an agreement with a bank in Netherlands to provide training to Gersel and banks on how to administer credit to the agri sector. Gersel Guarantee is backed by its own capital and provided by Gersel as a limited liability company. I think I have articulated this already. As we speak, Gersel equity stands at 300 million, and the board has approved 1-to-1 equity guarantee ratio. So what it means is that at any point in time, the outstanding guarantees issued by Gersel will not exceed its paid up capital because it should be 1-to-1. But you agree with me that as they issue the guarantees and they expire, what it means is that they can bring on board new guarantees. Gersel charges processing fee of 1% and a guarantee fee of 0.75% on its facilities. So this constitutes the income base of Gersel. Next slide, please. I think I'm done at this juncture. I'll pause. And if Dr. Pra is there, let me invite him to make a few comments. Dr. Pra, are you online?
Yeah, I'm online. I think
Okay.
you said virtually all that needs to be said. Except to say that just within the context of this workshop, one can understand that when there is market failure, we cannot really get those who want them to protect our environment to get access to financing. And so sometimes a promoter, an institution like the regulator, in this case, the central bank, can design a system that can help solve that market failure so that this activity becomes profit-generating incentive mechanism for the actors who want them to come to solve the problem for us. And that is what Gersel has done, helping agriculture to become attractive to banks and also making it attractive to the farmers themselves so that they don't see it as, if you like, an unfortunate situation for themselves, but as an opportunity to become rich because they can access the de-risking mechanism, and that de-risking mechanism enables them to become credit worthy, and the banks see them as profitable ventures. And so the society is able to solve this market failure problem with this incentive that has been created. So let's end there. Maybe there may be other questions and we can come up.
All right, thank you. So if there are questions, I think we'll stand by to take the questions. Dr. Pra will be on the line. I'm here myself with my colleague, Stephen Amma. So if there are questions, please, we are ready for the questions, please.
Thank you very much, Mr. Gassi and the team from Bank of Ghana for a very interesting and insightful presentation. Bank of Ghana's experience in developing the sustainable banking principles, as well as its role in instituting Gersel, is an inspiration and something to learn from for other regulators, especially in the region. In the interest of time, we ask Mr. Gassi to respond to the question on the chat box. And please keep posting your questions. So our next speaker is Ms. Annie Badalian from Armenia. Ms. Badalian has been with the Central Bank of Armenia for over 10 years as a researcher and project manager in the Financial System Development Division. And she was involved in innovative solutions. She is involved in innovative solutions and strategies for improving the welfare of society. She was also involved in the implementation of Armenia's agriculture insurance. Welcome, Ms. Badalian.
Good day, everyone, and thank you for having me here. I'm very pleased to be here, to be invited by AFI and to present the agricultural insurance scheme that we have launched in Armenia in 2019, basically recently, and I hope our experience will help you to for you, and if you don't have the agricultural insurance in your country, will be good good case study to learn from. Before starting, I would love to switch off my video just to get a smooth internet connection. So First, I would like to briefly mention some insight about Armenia. So Armenia is a small country and located in the South Caucasus. The population is slightly less than 3 million, and the area is small, and the terrain is mostly mountainous and flat. Basically, the climate is highland continental with very hot summer. So we have 40 Celsius in summer and very cold winters actually with -20 Celsius. It can reach, and in the mountainous area, it can reach even more than -20 . So next slide, please. Agriculture is a key sector of Armenian economy, accounting for 12% of Armenian GDP in 2019. So Armenia depends on agriculture, and the country suffers when extreme weather events occur. Almost about 35% of workers in Armenia make their living in agriculture sector, which is quite a high number. As you can see from figures, the vast majority are small farmers and family farmers. And for them, even small crop failure often lead directly to hardship. But because of the climate change, we have noticed that every year, the severe events happening more and more frequent. So basically, the more frequently appears that are happening in Armenia is hail, frost, and drought. And we have a hail every day, and not one time, even a couple of times. And basically, in the last 5 years, we also have frost every year. And this, to protect against the weather risk and encourage more productive farming, in 2019, the agriculture insurance was introduced. We believe that the insurance would significantly improve Armenia's agriculture risk management environment, contribute to stabilizing farmers' incomes, and increase the creditworthiness of agriculture borrowers. Also, we believe that the insurance system will also provide an effective alternative to credit government ad hoc relief payments used in the event of natural disasters. As each 5 years, as analysis shows, we are having the civil cases where the crop totally die. And the cost for government is quite a big in this, for these cases. Next slide, please. So considering all these events and what is happening regarding the climate change, the Central Bank of Armenia and the government of Armenia decided to implement the agriculture insurance scheme. So we have started a project with 3 stages. The first one is investigation of possibility of agriculture insurance installment in Armenia. This is basically, here we ask the consultants to do the research and feasibility study to know what we can do basically and which type of agriculture insurance we can implement in Armenia. The second stage that we had was development of insurance concepts suitable for Armenian market. And finally, the third one is the implementation of the system. For the implementation of the system, we have the consulting team, and it was selected by the international tour and was founded by KfW. Next slide, please. Thank you. I would like to say about the main partner, which is essential for implementing such kind of project. So our development partners was and are the German government and the KfW. They support the setup and launch of agricultural insurance through premium subsidy contribution, technical assistance, and facilitating the implementation of the project. The IIC which also helped with the premium subsidy contribution. The consulting companies, basically we have two consulting companies, one for conducting the visibility study, and the second one for helping with implementation of the agricultural insurance. And of course, the Swiss Re group, which provides reinsurance coverage. Our local stakeholders are farmers, farmer associations, insurance companies, Ministry of Economy and Ministry of Finance, and Central Bank of Armenia. Next slide, please. To start the project, so we gathered our main stakeholders and asked two main questions, basically. One is the program benefit, what they will have, what the benefit that we'll gain after if we implement the agricultural insurance. So all four stakeholder group voices that their interest in agricultural insurance, mostly motivated by direct benefits such like protection of their agricultural investment, as well as their social well-being, profit and business growth, and income stabilization. And we map all the benefits to identify, to understand what type of product we want to implement. And next slide, please. And for the second question that we have asked is, what are, in their opinion, the most critical factors for the establishment of viable agricultural insurance scheme? So all participants basically mentioned the first, the establishment of trust, which is because agricultural insurance was new in Armenia. The farmers should trust and buy the product. In the new market, it is essential, and especially if you are not doing it compulsory. In Armenia, we have a voluntary version, so the farmer should trust the product and to buy it. And the second one that was mentioned was the insurance product, the need to be affordable. So in agriculture sector, as I have mentioned, in Armenia, vast majority are small farmers that hold an average 1 hectare land. So it is essential to provide affordable product for them. But the agricultural insurance products are quite expensive, as the risk that the event will happen is quite high, especially in Armenia. So there was a need to introduce the government subsidy component. And in Armenia, currently, we have a premium subsidy. And we have 2 risks covered, 3 risks actually, hail and fire, which we had 50% subsidy, and frost risk, which we have 60% subsidy. The premium subsidies are designed to be cost effective, so they do not become a financial burden for the government. And for each product and for each perils, the level of insurance premium subsidy will reviewed annually. And of course, as a third main key point was mentioned, the balancing stakeholders' interest. This is quite an important thing we have identified during our implementation stage, because there are a lot of key questions that the stakeholders have a problem with balancing their needs. So, for instance, the insurance company and reinsurance company, they want to first ensure the crops that have less risk. However, the farmers and governments, they want to ensure the high risk crops. So here is where we have to communicate with stakeholders and decide what to do and how to go further. So this kind of question happening all over the implementation stage. Next slide, please. Next slide. Yes, thank you. So in 2019, we launched the pilot project, which means that insurance product will be introduced gradually. For the first year, we have 5 products that was introduced for hail and fire and frost risk. And currently we have 9 products available in the market. All 9 crop products selected based on the stakeholder suggestions and interviews that have been conducted among farmers. And we consider that later on the product is gonna will increase, and we hope that we are gonna have livestock insurance as well. Next slide, please. So in terms of what we reached as a product development, so we have 9 products, as I have mentioned, from hail and fire and frost risk. We gather our data from 2 main sources, which one is the interview with farmers, and the second, the weather data from the Hydromet, and also the data that our statistical committee of Republic of Armenia is collecting and publishing. As I have said, 50% of hail and 60% for frost subsidy we have, and of course 10% the sum insured as a deductible. We were trying to have a yield data, to get the yield data, but because of the data unavailability and the quality of the data, we decided to start with the production costs. So basically, we insure production costs rather than yield. Later on, when we gather the data for yield, we are gonna switch to and insure for yield as well. Our farmers have, we suggested 3 product cost, and our farmers can choose which one they want to obtain. So we suggest them 3 points, and this production cost was basically created by just interviewing the farmers. Next slide, please. However, to do this kind of major job, it was obvious that the national champions should be identified, and they should develop the standard products, train loss adjusters, handle premium subsidies, facilitate reinsurance. So basically, we need somebody that will centralize every concept and will further develop the agricultural insurance. And because CBA cannot do it, so next slide, please. CBA established the PPP body, AINA, which is responsible for development of the agricultural insurance market in Armenia. AINA established exclusively on a private basis and financed with 100% private capital. Board of Directors of AINA consists of representatives from CBA, Ministry of Economy, and private insurance companies on a rotation basis. Currently, only 3 insurance companies joined the project, but this is open to other insurance companies, and they can really join whenever they want to join the project. Next slide, please. The main function of AINA is developing agricultural insurance products, agreements and rules, management of government subsidies for agricultural insurance, certification and training of agriculture's appearance, loss adjusters, and database management. Currently, AINA also deals with reinsurance as well. Next slide, please. So the structure, the scheme is following. Farmers buy insurance from insurance company. Insurance companies send the data to AINA. AINA manage data and submit a subsidy application to Ministry of Economy. And the Ministry of Economy sent to the Ministry of Finance, and they transfer the subsidy to the insurance company. Next slide, please. loss adjustment. I think the loss adjustment is key here because loss adjustment process is key because basically in Armenia we didn't have any experience in this field. So INAS is in charge of certifying the loss adjusters and training them, because that's how we started with nothing, just to teach not the farmers but the agronomes how to do the loss adjustments. They are still in a training process because it's quite difficult, and it's a new area, and also the farmers and the loss adjusters sometimes have a conflict because they decide, the loss adjustment, they decide how much the farmers should receive the coverage after the damage. So basically, farmers, when event happens, farmers contact to loss adjusters. Loss adjusters visit to farm, and they identify the risk, what's happened, and they have to agree with farmers about the loss. After the agreement of the loss, they send it to the insurance company, and the insurance company should, of course, send the money for loss to the farmer. And here is INA is in charge of developing the adjustment methodology guidelines, and also in case of problems, INA will try to identify whether the methodology is followed or not. Next slide, please. So I will say more about challenges. I think we missed some slides, but never mind. About the challenges, basically we have a challenge in any aspect of the project. And this is because the project was new in Armenian and we didn't have enough knowledge about the agriculture's insurance. So the data is one of the main challenges because we didn't have a quality data. Product development, because of the lack of quality data, the product development was a problem. Product sales, this is another issue that we based. Our product was voluntary basis, and farmers didn't trust first the insurance. So to tell by numbers, for instance, the first year that we have sold the products in 2020, last year, as a first year. However, this year we sold for 1 month period, we sold 4 times more product than we sell entire 2020 years. So basically the trust for becoming more trustful, the product, and the farmers wants to buy more. Underwriting is challenged because in Armenia we don't have an actuarial that can do the underwriting correctly. So we have to work with a consultant firm. Loss adjustment, again, as I have mentioned, this is crucial for indemnity insurance, and if you then don't have a knowledge and capacity building is lacking, so it's quite challenging to build from scratch the new one. Which come again with claim handling, and of course the stakeholders communication is also hard. I think we spent during the project, we spent maybe 60%. We spent with stakeholders communication. Our time we spent with. Sorry. And what can I say about the lessons learned? The key, I will suggest that the key stakeholders should be identified and be involved from the beginning of the implementation. and significant time should be dedicated for stakeholders for communication. This has to be considered because otherwise it will not happen, the project. To build a viable system, a long-term mutually benefit partnership between public and private stakeholders is required. So basically, you have to know that if you implement, you have to work with the private sector, you have to work with the public sector in a long term. In regard to premium subsidies, a long-term commitment required from the government. Good quality data is essential. If there is no good data, then you should collect it starting from as soon as possible. Even if you don't start the project, if there is an availability to collect the data, it's recommendation to start to collect the data. Otherwise, during the project, start to collect the data. And also, diversified portfolio, which is essential in this type of product. I think I kind of very quickly actually have done the presentation. We missed some slides, but never mind. If you have further questions, please, I will be happy to answer.
Thank you very much, Ms. Badalian, for another insightful presentation on the Agricultural Insurance National Agency. The experience and lessons learned are very much relevant for countries that are also thinking of instituting climate risk insurance. I don't see any question in the chat box, but please keep posting any question you may have for Mr. Gyasi and Ms. Badalian, and this will be addressed. And now we thank you very much. Yeah, thank you very much again.
I think I try to, overall, try to tell the key factors that we have faced and the challenges that we have faced as well.
Yes, thank you very much, Annie, for the very insightful presentation. And now we move on to the action planning. We've learned about the inclusive green finance, including some policy examples from AFI members. We've also had a background on the impacts of climate change and environmental challenges in Eswatini, as well as climate and environment-related policies. We've also heard from the experience of Ghana and Armenia, and given these learnings and insights, we're now down to action planning. So as mentioned earlier, the objective of this session is to chart out the next steps for the Kingdom of Eswatini, and this output will provide inputs to planning further actions to move IGF forward in the country. So to facilitate the action planning, the class will be divided into 3 groups, and you will be transferred into the breakout rooms. Each group will discuss what should be the next steps to advance IGF in Eswatini. Please choose a presenter who will share the highlights of your group discussion with the larger group. You will have 20 minutes to discuss and note down the key actions, which will be shared in the plenary. And each presenter will have 2 minutes to quickly present the highlights of the discussion. Each group will have a facilitator from AFI to assist you in the exercise using Padlet. So here's what the group will be discussing. Most important is to identify at least 2 key action points that you think the Kingdom of Eswatini should undertake to advance IGF in the country. So for each action point, it should have the specific activity or action, expected output, or stakeholders who will be involved, the lead institution for the action, the expected outputs, and the potential challenges and the implementation timeline. So the following is an example of what one action point should have. For sure, there will be a lot of ideas among you on what should be the next steps, but we're requesting at least 2 key action points. So the facilitators in the breakout room will be Johanna for group 1, Majida Hashim for group 2, and Laura Ramos for group 3. So I don't see any question in the chat box. I hand it over to Emilia to assign the participants into the breakout rooms. Okay, well, welcome back to the plenary. I see everyone is now here. So we proceed now with the group presentation. Who would like to volunteer first? Which of the 3 groups would like to volunteer first?
Maybe Jen, we start with group 1.
Okay, please go ahead. Please share your screen and please go ahead with the presentation.
Thank you very much, Jen. So from group number 1, we have Dalton Nakamisalo, who will be sharing the main discussion points from our group. I hope the screen is okay. It's our Padlet.
Yes, we can see the screen.
Very good. Please, Dalton.
Malo, representing group 1. I think from our group, you can see on the screen that we have a number of and if you look at the list, it warrants that one of the key next steps is for us to convene a national event, which will take a PPP approach, where we will actually look at a more comprehensive action plan that will cover issues of appointing a national lead agency for the implementation of the Inclusive Green Finance Program. And also, we are also recommending that we conduct a feasibility study so that we better understand the contextual issues, challenges, and get groundbreaking recommendations on how we can move forward. Then that will be translated into a national roadmap, roadmap, and we are going to define a strategy on how we are going to implement the reforms related to the inclusive finance, inclusive green finance. So noted the important part of the executive study. We do a clear gap analysis and touch on issues of the different segments of our players, including the micro, small, and medium enterprises, so that we have more on how we are going to run through the program. Issues relating to data, issues to buy-in and ownership of the overall journey, and it will need us to have a clear management approach so that we have the implementation of the Eswatini Inclusive Green Finance Program. Thank you.
Thank you very much, Group 1, for the action points that was presented. And now we move to the next group.
Hi, on behalf of Group 2, I would like to invite James. I will be sharing my screen now.
Thank you, Machida. Good day, everybody. I think I'll be sharing the stage with Magapev. She will come in for the second action point. But for the first one, we agreed that looking at our latest FinScope, one of the challenges which we identified was the uptake, especially of insurance. So we felt if we could do a landscape survey in the country, that could really be helpful. So we concluded that the expected output would be to inform the policy decision. And then we also thought of development of appropriate financial services and products, looking especially at our smallholder farmers. We realized, and you will also realize, that about 70% of the farmers in the country are normally based in the rural areas and they are at small scale. We felt the action should also help us in terms of addressing consumer protection concerns which we have identified. And yes, I've spoken about the smallholder farmers. In terms of the stakeholders, we felt if everybody who is in today's call could be part of that, that could really be helpful. But we could benefit if the Minister of Agriculture, given that this is their portfolio, if they could lead us. And we also mentioned the Minister of Economic Planning and Development. We mentioned SNOW, which is the biggest farmers union in the country. And we also thought of the meteorological weather station. We were thinking about information which is weather-based information that could really be helpful. So we thought the meteorological weather station department should be part of the stakeholders. And we also thought of the agro institutions, those that are involved in doing research, which is agri-related. The lead institution, this is their portfolio. We thought of the regulator of the non-bank, which is the FSRA. Possible challenges we thought of could be the quality of the data. If we don't have access to quality data, we might not have a good outcome. And we also thought of the cost. If it is deemed to be too expensive and there isn't proper uptake, we might run into challenges. And we also thought of finding the appropriate development partners. So in terms of challenges, we thought of those three. And then in terms of the resources required, we felt we would need the support in getting hold of a consultant, because we felt none of us here are experts in that field. Timelines, we thought of 1 year plus. I think I covered everything. Did I leave something, colleagues? You can add, Namta?
It seems you've captured everything, James. Thank you.
All right.
Thank you very much, Group 2, for your contribution. And
we have a second action point.
Oh, okay.
Someone from the central bank will be presenting this part.
Yes, thank you very much. So we thought we'd use the 7 principles as shared by the Bank of Ghana, with our action point being the creation of a feasibility study on sustainable banking principles. So we just customize what they shared during the presentation. Our expected output would be the roadmap towards Eswatini's own sustainable banking principles. The stakeholders are as outlined, being the Bankers Association, the Central Bank of Eswatini, Ministry of Finance, and our SME Guarantee Scheme, as well as the Ministry of Commerce. We want the SME Guarantee Scheme specifically mentioned so that they can diversify their coverage of the guarantee scheme on the farmers. Then our lead institution would be the Ministry of Finance. There was a debate here. Possibly it could be the central bank as well. We said our possible challenge would be buy-in from the banking industry, since they already have their own strategies, so they need some convincing. And then the resources required would be time, capacity building, probably a consultant, and a phone call to Ghana. Thank you very much. Our timeline is 6 months. Thank you.
Thank you very much, Group 2, for this contribution. And we move on to Group 3.
Good afternoon, colleagues.
Good afternoon. Please go ahead, Prudence.
Yes, it's Prudence. I'll be presenting on behalf of Group 3. But what I'm actually seeing here is similarities, because we also agreed that as a country, maybe we need to conduct a diagnostic study, vulnerability assessment, or feasibility study, so that we can be in a position to, at the end of the day, come up with a roadmap that will be in a position to implement and monitor the implementation. And we agreed that in terms of the stakeholders, is the Minister of Finance, Eswatini farmers, and as well as the Minister of Environment and Tourism, Minister of Agriculture, the Central Bank, the Financial Services Regulatory Authority. The lead there can be the Central Bank working together with the Minister of Finance. The resource required, we said we will just need support in terms of financing the roadmap and the implementation of the roadmap, and actually in terms of even conducting the diagnostic studies. We may as well need also for further capacity building in the country to drive the agenda, the inclusive green agenda. And we also look into issues of agriculture insurance to say, though we have agriculture insurance in the country, we are concerned about the uptake, and we are concerned again to say, is the insurance products that we have addressing the issues of greening the environment? And the credit risk guarantee as well, we felt that is one thing that we may need to look into. I think those are the main issues that we discussed as a group.
Thank you very much, Prudence, and thank you everyone for the participation. As mentioned by Prudence, something is emerging here, and we see the need. Everyone is saying there's a need to do a landscape check or an assessment, such as climate vulnerability assessment, to see everything first, and then proceed into roadmap development and other specific policies. And to cap this session, we thank you very much again for your participation. So to cap this session, we'd like to call on Ms. Nomsebo Hadebe, the Center for Financial Inclusion's CEO, to provide a quick, short reflection on what was presented from the groups. Over to you, Ms. Hadebe.
Thank you so much, Jen. Can I not share my video? I just want, may I start with acknowledging the presence of the governor and all the participants, the ministry's representatives, and everybody here. It's good afternoon now. I think it's been a very insightful morning. We may have underestimated the time, we needed more. But what is key that is coming out today for me is issues that we cannot work alone as different regulators, policymakers, or policy advocacy agents. We need to really work with both private and public sector. And it's very important to note that from a financial sector perspective, inclusive green finance is key for financial stability and the integrity of our financial system. Taking back from this morning's presentations, I'd like to reflect on what the minister said on the slogan that government has used over the last, I think ever since I joined government, the soil is our greatest asset and we must preserve it. It shows that at this point in time, we need to really focus on it. I'd like to also look at the issues that are coming up. There's a lot we need to do together. I'll highlight that we cannot do it alone. We need to walk together on this journey. There's a lot of research that we need to do as a country. We will obviously have the normal problems of data quality and accessibility to data, but those are issues that we will work on. But more than anything is the protection of the people that we serve, which is the underserved sector of the population. I see us having continuous engagements after this. I did talk to the director privately. We need a national dialogue on IGF issues to unpack. She got a lot of questions on issues, and I think it's time we start to say, how can finance work for the environment as well? And putting it in place for issues of the sustainable development goals. In a nutshell, my reflection of today is there's a lot of work ahead for us that we need to do, and it needs us to be partners. We cannot all, we need to take it in digestible chunks at a time, not to take up everything together because we will have an issue with the resources. But let's continue to engage and make sure that finance does work for the poor. Thank you.
Thank you very much, Ms. Hadebe, for the reflections. And indeed, there's a lot of work that needs to be done for Eswatini. And we will consolidate all the outputs from the group and communicate it accordingly to the group that's involved in the planning. And we're now off to the last part of the training. We're honored to have with us today the Honorable Governor Majosi Sitol of the Central Bank of Eswatini to conclude this event. Thank you for staying with us, Governor, even if we went kind of overtime. Over to you, Governor Sitole.
Thank you so much. I want to start off by really appreciating the invite and the participation that one has really benefited from. I'd like to take this opportunity to express my gratitude to all of you for coming together here from your various organizations. Your cooperation has enabled us to conduct a fruitful training on inclusive green finance. I believe the thoughts and ideas generated will go a long way in developing in the development and adoption of green financing policy in Eswatini, as well as assist the Ministry of Finance to successfully develop and implement IGF initiatives. The Ministry of Tourism and Environmental Affairs provided insight on the effects of climate change in Eswatini. Now we also have a better understanding of the current government responses or plans to address the challenges brought on by climate change. This sheds some light on how we can proceed with policy formulation inclusive of green financing strategies that can better suit our current environmental climate. It is also quite fitting to take a moment to reflect on the main outcomes of this training. This is in addition to what Nomcebo has been saying. There's been a better understanding of the mandate and role of the financial regulators with regards to green financing. Special attention needs to be paid to the impact that climate change and environmental degradation have on financial stability. We now have an appreciation of AFI's 4P framework of IGF policies and regulations, the 4Ps being promotion, provision, protection, and prevention. Policies addressing the 4Ps of inclusive green finance offer financial regulators an intuitive way to think about the full range of policies they can adopt for inclusive green finance. We always appreciate the lessons learned from the stories shared by fellow AFI member countries. This forum presents an opportunity for us to understand each country's challenges and solutions to mitigate these challenges. In this instance, we have learned from the experiences of Ghana and Armenia the evolution of inclusive green finance issues, the challenges and policies and strategies they developed which worked well to address these. The biggest takeaway for all of us from today's session is the practical application that was made. I am referring to the action plan that we were able to draft in our various groups. This action plan will be followed by the government of Eswatini to enable her to advance IGF policies in Eswatini. We look forward to receiving progress reports regarding the implementation of this action plan from the CFI. I hope that the coordination that was observed today as group discussions ensued will continue as we begin to put in the practical work into our inclusive green financing initiatives. In conclusion, I'd like to thank AFI for the continued support and guidance they have given to the Minister of Finance through the Center for Financial Inclusion as they drive financial inclusion in the country. I also wish to thank you all for your active participation throughout the session. I thank you for your attention and may God bless us all. Thank you.
Thank you very much, Governor Sithole, for joining us again and for that very inspiring closing message that encapsulates today's discussion and exchange of ideas. Indeed, the coordination for today's event is in itself an achievement in moving IGF forward. We look forward to the adoption of IGF into policies and initiatives in the context of Eswatini. And next slide, please. Thank you all again. We'd like again to thank everyone for your participation, and thank you also to the groups involved in planning and preparing for this event. We have here an evaluation. We'd like to request that you fill up the evaluation. You can access the link. We'll post the link into the box, or you can just scan the QR code. Thank you again, everyone, and good day to all. Thank you.
Thank you.
Thank you, everyone. Take care and stay safe.
Thank you.
Thank you.
Goodbye.